How's it going, good people? My name is Jared Ace and welcome back to MoneyMetEish. In today's video, we are going to have a look at how the MoneyMetEish EasyEquities portfolio performed in May. But before we get into it, please remember to hit the like button, subscribe down below, ring the bell, and leave a comment about how well your portfolio did in the last month. Let me know how it's doing, what you're holding. Let's have a chat about it down below. If you're new to the channel, every month I show you inside my EasyEquities portfolio. I show you exactly what I'm holding, I tell you who the winners and the losers are. But if I'm being entirely honest, I do this for a very selfish reason. I'm the type of person that needs some sort of external accountability, and that is you. I use everyone who views these videos, watches them, likes them, and comments down below as my own little personal external mental auditors. So if you would like to take that role far more seriously, please go and shoot holes in every one of my holdings. Let me know why you like them, why you don't like them, and comment it down below. That way we can have a discussion and I can see if maybe I have made a massive mistake with holding any of these companies. But without any further ado, let's get into the USA account. The USA account is where the majority of the movements have happened this month, and that is because one of the holdings shot up 24% in one day. We'll have a look and see who that was in a little bit, but first, let's have a look at the winners and the losers. The winner for the month is Cloudflare, which is up a mind-bending 58% in the last month, which means that it's actually almost made back all the paper losses that we've had holding the company for the last 18 or so months when it was really taking a pulverizing. We haven't quite yet broken even, but we're getting close. And this is seemingly all down to two little letters which have come to save the day, A and I. Even though Cloudflare took a massive 30% walloping when they announced their Q1 results, they have seemingly benefited from the gold dust being sprinkled on anything having anything to do with AI. Turns out a few AI startups have been using the company's security software as part of their operations, and just the mere mention of this by the company has been enough to see the share price rocket. The same forces seem to be at play when we look at the other company, the one that took that massive 24% rise in one day, Nvidia. Nvidia had the second highest returns in our portfolio in May, and it did lead to a few weighting issues. The company has seemingly managed to profit in one way or another in every major trend in tech since 1993. It's really quite incredible, starting in 1993 with 3D graphics, then moving on to GPUs, and they've actually been in the AI business for over 10 years. Then moving into crypto and the metaverse. If there is a major trend in the last couple of years, Nvidia has benefited from it. And this can be seen in their incredible 47,000% gain that they have had since 1999. Now, we saw a 153% rise, and because it happened so quickly, I was really uncomfortable with just how quickly the share price shot up. What I decided to do was sell 30% of the holding, which was roughly the money that I had put in, and now I guess we're just playing with the bank's money. In my mind, A, it's never killed anybody taking profits, and B, I've kind of been burnt before, having share prices shoot up 300, 400%, not taking any profits, and then watching them plummet through the floor. I would be lying if I said that that didn't have some role to play in my decision to sell. The loser for the month has been Manchester United, which doesn't really bother me too much since it's less than 1% of the portfolio. It's down 5.3% in the last month and 22% year to date, and the dragging on, the extended dragging of the sale of the club is really taking an effect on the share price. The constant back and forth between Sir Jim Ratcliffe and the Qataris, and now there's going to be more people involved. It's just taking forever. The market is clearly not knowing what's going on. I don't know if anyone at the club knows what's going on either. As an Arsenal fan, I am loving the turmoil, but I also know that that's not going to continue forever. And I highly doubt whoever takes over the club is going to run it as poorly as the Glazers have over the last decade or so, and I highly doubt it's going to be run like the Mickey Mouse Club that is Todd Bowley's Chelsea. So, in the meantime, I am kind of like the market. I would love for it to be over as soon as possible, but I also kind of want it to carry on as long as possible. If I make absolutely no money off of this, it really doesn't matter that much. It was an experiment, a bit of a gamble. So, yeah, but it has been the worst performer in the portfolio in the last month. I now have a small amount of cash on hand in this portfolio, and I would really love to put more money into the USD account, but I just can't bring myself to do it at the current ZAR USD exchange rates. They are crazy at the moment. If anyone has any experience of depositing directly into their USD account from a foreign bank account, please comment down below. Let me know, since I have been contemplating whether that would be a better thing to do. So if you have, please let me know, and that will be something I would look at in the future. Now, onto the ZAR account. The ZAR account has been a source of nothing but sadness this month, and I have fallen from 3rd in the Crystal Challenge to, I'm sure, barely on the first page. It's been a month, guys. Officially, the smallest loser has been Affine Investments, who are only down 0.22% in the last month. This is not super uncommon for a very small cap stock, which Affine is. It only has a market cap of 355 million rand. So they are very illiquid. They're not buying shares very often. It's not a big surprise if it doesn't move that much. The company did, however, come out with their annual report just while I was scripting this video, and although the initial perusal looked like absolute bloody murder, with revenue down 80% and earnings per share down 90%, on a little bit of a closer inspection, it's really not that bad. The majority of last year's revenue came from a massive 160 million rand fair value adjustment, which is roughly half the value of the company when taken out, shows that the revenue has actually increased by 35% or 10 million rand in the last year, and the dividend is up by 75%. And as we know, the dividend is why we own this company. The loser for the account is undoubtedly, undeniably, and extremely painfully Purple Group. This is really not a surprise, since the majority of people don't have the disposable income to be buying shares and trading very frequently, which is where Purple Group gets the majority of their revenue. They've just had a rights offer, which we did take up. I didn't buy more than my allotment allowed. I just couldn't have been bothered. But we did take up the rights offer, simply not to be diluted. Share price is down 18% in the last month, which is one of the biggest contributing factors to why the account overall is down 10%. A lot of that is due to the fact that Purple Group is the second largest holding, and it's down a lot. Although none of the other companies actually ended in the green, everybody else had a awful bloody time this month. Everyone that I was holding, at least. Unofficially, the winner would have been Jasco Electronics had they not been delisted, but the delisting was the reason we bought them. They were delisted at a 23% gain from where we bought them, so that would have been the highest gain for the last month. However, I am really happy with the 23% that we took off of them. Would have been lovely if I had invested more. Put 100 rand in, left with 123. Not too disappointed. This is something that I will be looking at in the future as well. And that leads us to our final segment, the largest part of our portfolio, the tax-free savings account. We invested 7,000 rand in each of mine and Mrs. MetEish's tax-free savings accounts in the last month, and this is how those funds were split up. I put 2,500 rand into the Satrix India and 2,250 rand each into both the Core Shares Global and the Signia S&P 500. The winner for the month was the Satrix Nasdaq 100, which was up 15.6% on what seems like the very same factors that pushed the US account to rise so quickly in the last month as well. The loser for the month was Satrix India. It was down 1.2%, and if I am correct about the forces which are pushing the US markets higher, it's not uncommon to see people withdrawing some of their funds from emerging markets like India, South Africa, China, and putting them into the US. I wouldn't be surprised if that is the case, but it could result in a very quick reversal should one of the major central banks decide to start hiking interest rates again. India remains the smallest ETF holding we have in a tax-free savings account, but it will start to eat away at the weightings of the Satrix Nasdaq 100 and the Signia Fourth Industrial Revolution, as I've paused funding those two ETFs, and I will continue to put money into India as I sort of bet on India getting a lot of the business which China is currently getting, as businesses find it more and more difficult to continue their operations in China. I suspect a lot of those tech companies will move a lot of their operations to either India or Vietnam. And it is said that by 2025, 1 in every 5 iPhones will be made in India. Currently, that leaves a massive room for growth in the Indian market, which I am hoping to benefit from through this ETF. Now, on an overall portfolio level, I'm really glad with the gains that have been made in the last month. Although I'm not getting too carried away, since I do believe that all this hype around AI can very easily reverse just like that if anything happens, such as the petition to stop all AI research for at least 6 months, so that proper protocols and safety measures can be put in place. Now, if that were to happen, we could see a large amount of funds draining from these AI stocks and being put into any other investments. A similar situation could happen if we start seeing central banks raising interest rates again. So, I'm not getting too excited. So, that is how the MoneyMetEish EasyEquities portfolio fared in the last month. Please remember to hit the like button, subscribe down below, and ring the bell to be notified whenever we upload new videos. Also, let me know how your portfolio did in the comment section down below. Let me know what you're holding and what you think of the MoneyMetEish portfolio. Thanks for watching and good day.